So, as I am kind of finalizing everything up about this course, I've only got a couple videos more to do, and I see this come up today on my headlines as I'm recording the last videos to go into the Value Investing Journey Masterclass. Everybody's panicking. The stock market's fallen 1,600 points now. Actually, when I last looked, it was 1,100 points. Now, apparently, it's the massive 1,500 points is the biggest drop since 2008 financial crash. Jim Cramer says it's a flash crash, and it just broke. What did he say? It just broke. It's a great clickbait there. Got me to click on it. It just broke again. I don't know what that means. And I don't feel like reading the article because I don't listen to Jim Cramer. So, what happens when the stock market crashes 1,000 points after you've bought something now that you have these skills? What happens when the stock market drops 10%? What happens when the stock market drops 50%? What do you do in these cases? Honestly, I do nothing. Until I got a news alert on my, have a Google Pixel phone, a Google Pixel XL, and it tracks somehow creepily tracks my likes and brings me news that I search on a regular basis. So it knows I search about the stock market, so I got an alert about the stock market crashing. If it wasn't for that, honestly, I wouldn't have known that the stock market fell by 1,100 points or 1,600 points or whatever it ends up being. I would have known. Why? I don't check the market every day. I don't care what the market does. I don't care if it goes up by 2,000 points in a day. I don't care if it goes down by 2,000 points in a day. I do care nothing about what the overall stock market's doing. I value individual businesses as a potential business owner. That's what I do. Or individual assets in the case of potential real estate investments or private businesses. I value these assets and potential businesses as a business owner. I don't care. Again, I want the best information I can possibly get. I'm a very micro-oriented investor. Individual company, one company at a time I invest in. What we're looking at here is what's called macro investing. I pay zero attention to the macro. Why do I pay zero attention to the macro? I'm terrible at predicting things. I'm terrible at estimating things. That's why I don't predict or estimate things in any of my analysis I've ever done. That's why I will never do that. I will say something along the lines of the stock market's overvalued, but I'm not going to say when it's going to crash, because nobody knows. If everybody knew when the stock market was going to crash and the next depression was going to happen, nobody would ever become poor from the next depression because everybody would get out. So apparently, with this crash, you get these vivid terms from the 1929. All these are done to evoke emotion. Everything I've taught in the masterclass is to get rid of emotion. So I don't pay any attention to any of this crap. And I call it crap because it's crap. I don't pay attention to any of it. I don't listen to Jim Cramer at all. He actually is a good business analyst. He used to run what the hell did he do? He used to run a hedge fund, and I think he was pretty good at it. Pretty good stock picker, and then he went into thestreet.com, and now he's of course on CNBC and he has his shows, and he's more of an entertainer now. His stock advice now, frankly, sucks. But he's more focused on being an entertainer now. This is all done to get your emotions going. Again, unless I got that Google alert from my phone, which I wish I could get rid of that. I wish I wouldn't even know because I don't care. I'm to the point now where even if I see that, I told my dad, and I was like, I told my dad the stock market crashed 1,600 points today. And I was like, I literally that's what I said because I don't care. The stock market's massively overvalued. It's been massively overvalued for, in my opinion, more than 5 years. At some point, I know it's going to crash. So, again, what do I do in this situation? I do nothing. I prepare. What I've been doing this whole time while the stock market's value has continued to rise over the last 5, 6, 7, 8 years, whatever it's been, I've continued to prepare, build my businesses, bring on team members, get my training processes down, get coaching clients, building this course and the training vault and all the other training programs my team and I are building. I'm building my businesses, building my foundations of my personal businesses so that when the stock market crash happens, I'm ready with capital available to get back in as soon as I feel or as soon as I can find value again. Until then, I'm going to keep working on my businesses, continue improving myself, and continue paying zero attention to what the stock market does on a daily basis. There is a saying by Warren Buffett. Buffett, 50, can't spell his name right, 50%, what is it? Crash. And this is how silly this is. Warren Buffett's advice for a stock market crash in 2017. The stock market went straight up. And where is that quote? He has a quote. I can't find it right now. He has a quote that says, if you can't stomach, he doesn't say the stock market, but it applies to the stock market as well. If you, I think the quote was something along the lines, if you can't emotionally stand your investment going down 50% and still base your decisions on facts and logic, you don't need to be in the stock market. Same holds to the stock market as a whole. If you can't stand a 50% crash and you don't know what you do with yourself and you lose sleep and you'd be worrying yourself sick, you don't need to be in the stock market. It's going to happen at some point. There's a recession on average I believe it's every 7 to 8 years, and we haven't had a recession in, 10 years now? 2008. So we haven't had a recession. We're overdue for a recession. The stock markets and bond markets and real estate valuations around the world are near or at all-time highs. Bitcoin was really recently up to $20,000. That's under, last time I saw it, $8,000 now. So I'm saying all this not to scare you. I'm saying this to go back to week 1. If you're having problems with this, go back to week 1. Learn to control your emotions. Learn to become more disciplined. Learn to become emotionally stable. Learn to become more patient. Again, as the stock market's gone up, I could have continued researching stocks and pretty much banging my head against the wall since I couldn't find anything. Instead, I transitioned and I was growing. I'm building the foundations of my business. Now I'm ready. Once the stock market crashes again, that I'll be ready when that happens with capital. So and to further illustrate this stock market corrections, where is it? This comes up every once in a while. What is this? And why can I not see it? Why is it so? That's why, because apparently it's forbidden for some reason. That's individual year. There's a chart out here somewhere that shows. Okay, this is similar. This isn't exactly the one I'm looking for, but it's similar enough. So, especially since this looks like it's focused on wars. So, ignore the wars here. You can see the dips. Dip, 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 dip. Over time, this has generally risen a lot. It's going to most likely, unless this entire stock market crashes, it's going to continue to rise a lot. Dip, dip, rise. If you buy somewhere in these places, you can make a lot of money. If you are able to control your emotions and you're ready. Again, you do not want to buy here when people are saying buy Bitcoin because it's going to take over the world at 5,000 and then it goes up 10,000 or 20,000. You buy in at 15,000 and then it crashes. That's what happens in see, up, down, up, down, up, down. The stock market over time is going to go up again unless the entire stock market implodes, which would lead to the entire world economy imploding, which then we're going to have much worse problems about than worrying about how much money we have in the stock market. So And even if you, let's scroll in here. Yeah, this one, it's not letting me scroll in too far. There you go. There's a little bit better. So even here, dip right there, and then it immediately shoots back up. By beginning of 1980, it was around, what was that, 100 points. By the end of 1980, it was around, I'm assuming 500, 400, 500. So, and that's even after Black Monday, a giant stock crash in the 80s. So, you have to be able to control your emotions and hold over the long time period. Remember, again, in week 1, let's see here, where is it? I believe it's actually an introduction to the course. Let's see. And this is the back end of the course. Oh, damn it. Nope. Not there. So where is it? What I'm looking for is the picture of Buffett, where he's made 97% of his wealth after he was in the market and in the business world after 40 years. You can do the same thing. You just have to be patient. You have to be able to, you have the knowledge. What the fuck is this? I don't know what's happening right now, so I'm going to stop pressing buttons because I don't want this entire course to explode. So let's go back over here. So if you're patient, you know what you're doing, and you can control your emotions, you are going to win. 100% guaranteed you are going to win in the long term. Again, if you know what you're doing, if you have successful investment processes, you do, and you're disciplined with those processes, you are emotionally stable, and you can control your emotions, and you have a long-term mindset, you are almost guaranteed to do well in the stock market. Why? Again, because of this pretty much arrow that's almost straight up. That's why. So again, stock market, don't care that it's dropped, don't care what it's doing, just keep grinding, just keep working every day on myself, my businesses, and my team to get better. And I highly recommend you do the same as well, because again, unless I got that stupid Google alert that I wish I could get rid of on my phone, I wouldn't have even known that the stock market was crashing 1,600 points or whatever it ends up being today. So that is how you deal with a stock market crash. And I don't even like to call it that, because at this point, it's not even a 10% correction. And we've, again, been going straight up for 8 years now. So to me, that's not a crash.